The Financial Times, in an editorial, have said it's time for Bola Tinubu to make ordinary Nigerians, and not just investors, feel the benefits of the many reform initiatives launched. It's not one or the other, it has to be both. One area of attention continues to be the electricity sector, the setup of regional development institutions, updated legislation to facilitate state roles in providing electricity are also examples of areas with potential to produce future positive outcomes yet unfelt. Also, ending runaway inflation, high interest rates, and unstable foreign exchange underpinned by a doable 2 million barrels per day of oil production are all gains yet to be harvested. Hello, welcome back to Global Business Insights, where we continue to focus on the Tinubu Scorecard after the first 2 years. US markets came back sharply higher and upbeat on trade after Trump said he was monitoring positive steps, including establishing meeting dates for trade talks with the European Union. This was after he agreed to delay a 50% tariff on goods from the bloc until July 9. Yesterday, we got more dovish comments from ECB's policymaker Francois Villeroy, suggesting that there is still room for further monetary easing and also warning about the risks to financial stability stemming from a still uncertain trade scenario. This came also following uninspiring Eurozone economic data. But back to our main story, in which we replay comments and insights on the scorecard of Nigeria's 16th president after 2 years.
Which areas might we want improvement? Security stands out for me, especially in the northeast and the north central and even the northwest, across the north. And the things we read about in the north central are horrific to imagine. There's now proactive work going on around communicating the policies and achievements and programs and thinking of government. I think one area of positive stands out in the area of the management of the country's FX situation. We had a crisis unknown to most Nigerians. By the time the president came in, net reserves were down to under $4 billion by May 2023. There are over $23 billion today. That's a remarkable achievement, with over $10 billion of forwards, debts, obligations to airlines, and all of that cleared off. So that's a very clear area. Another area is the area of investment. Particularly in the oil and gas sector, the turnaround of not just the investments in the oil and gas sector, but the remarkable turnaround in that sector in terms of reforms, in terms of new final investment decisions from Shell, from Total Energies, from ExxonMobil, commitments and so on. Some are at different stages of progress, but very clear turnaround in the investment position in the oil and gas. There's a new optimism and resurgence in the upstream oil and gas. The downstream is also an area of achievements, with complete deregulation and a new Dangote refinery operating. So the outlook for Nigeria's downstream energy has changed completely, apart from the investments in the sector. Outside oil and gas, there have been commitments for investments in other areas and significant amounts. I've seen a data from the government that puts that figure at up to $50 billion. But of course, before they become actual investments, we'll see how that goes. And I think the last one I would refer to will be the gradual return of macroeconomic stability. Inflation is slightly down. Well, through the rebasing came down significantly and now slightly down to 23%. Um, Exchange rates are stable around 1,600. They've been stable for 5 months. The main area in which we're yet to get some positive move is regarding interest rates. We hope that we'll get to that as inflation continues to decline.
Analysts are also warning that for Nigeria to see progress, the intelligentsia and elite class should shun tokenism and hold government to high standards, but also focus on the most crucial needs, which are one, reducing poverty, too many under the poverty line; second, transformational interventions in education and health to start a long journey towards improving education and health to continental leadership; and thirdly, effective anti-corruption initiatives to plug massive leakages without which economic progress is not going to be sustainable. Indeed, many observe innovations in important matters like with issuance of passports and infrastructure in the Federal Capital Territory. Road improvements are also evident, but there are still a few question marks. A more than 100% devaluation of the black market rate from 750 to 1,600 to the dollar hasn't been explained, and some think that unbridled corrupt capital flight by the three tiers of government of the over 100% increases in fiscal revenues from devaluation and subsidy removal is responsible for this devaluation. Also negative is that there is no pretense to fight corruption, as a 15 trillion naira road project and another huge port renovation project was routinely sole sourced to well-known cronies. The scale of aggressive fiscal expansion without major control, such as an anti-corruption or due diligence emphasis, compounds the risk of fiscal leakages that, of course, will worsen inflation and FX instability. Others have commented that there is lack of strategic clarity and the vision to take citizens out of poverty is at best hazy. There's also need to accelerate the work in progress. A lot going on, especially to turn the foreign direct investment commitments, which are commendable, into real inflows. So you do need more work to improve investment climate, that is macroeconomic stability, addressing insecurity, also enhancing jobs creation, taming inflation, reliable justice administration, and strengthening education, health, and food sovereignty. That's the right of people to be able to feed themselves through sustainable agricultural practices. The president also needs to keep promoting unity, cohesion of the country, and belief in Nigeria by Nigerians, especially the youth who tend to get easily disillusioned. In an informal survey of a few experts, several dimensions of performance relevant to the Nigerian Renaissance were considered on a scale of 1 to 5, 5 being excellent. The dimensions include, first, the economy, which looks at several factors: business sectors, economic infrastructure, important to supply chains, and most agree there was a major improvement here. The score initially would have been a 1 before the Tinubu years, and now we can say that the score is more like a 3 out of 5. Electricity is another separate dimension. We separated that only because of its absolutely critical nature, especially the need to expand transmission capacity and enhance effectiveness in all the various sectors, whether it's the upstream generation to the distribution. Experts say improvements have been minimal, a score of 1 out of 5 also given here. On quality of life and development of human capital, including education and skills building interventions, poverty has expanded and high inflation has squeezed wallet. Again, a score of 1.5 out of 5. We can agree that the outcomes of reform have been particularly biting in the immediate term, and we could get improvements in quality of life in the medium term by the time we start seeing the impact of a lot of the intervention. Security remains a concern. Experts score that 2 out of 5. And another dimension is governance, which includes cost of governance, anti-corruption, and efficiency of federal and state and local oversight agencies and the political structures. For governance, the Tinubu government is rated a 2 out of 5. This gives, if you add everything up, a total of 9.5 out of 25 or 38%, which is still below average, mainly because the lack of progress in electricity supply is considered to be a big downer. I wouldn't weigh all the factors equally, so the score of 38% may be too harsh, and one perhaps should have accorded more weighting to the economic dimension. All experts agree that on the 5 dimensions there was progress on the legacy of the previous government, especially on the economy, and less evident on many other factors, as we have shown. Let me close by discussing the medium-term outlook, which may present much lower crude oil prices than envisaged and lower volumes of crude exports given the lingering investment gaps, implying we could have foreign exchange shortages that may mean further inflation and economic headwinds. I only say this so the government, I'm sure they know that. The central bank also flagged this at the latest MPC. The government needs to initiate budgetary and fiscal adjustments in response to the possibility of crude in the low 60s or even lower, and do this in a proactive fashion. There are opportunities to improve costs, managing costs and quality of governance, and also the need for a war room emergency approach on electricity. The government needs to build on the progress on the economic front and show results on the other fronts like electricity, like I said, and radically improve on due diligence and anti-corruption. Also watching, as we know the central bank is doing, the inflation print, which thankfully is trending downwards. Analysts notably expressed satisfaction with the central bank governor Yemi Cardoso in his role to get macroeconomic stability, which will help economic growth and quality of life as jobs are also created. Others also commended the president and the strong team appointed to the NNPCL board. There is a lot of hope on that front. But you know what they say, hope is not a strategy one can rely on. Privatization remains the best bet for NNPCL. We have to wait and see how that develops. Transformation also takes more time than when you are just tinkering with things, and a second term may be a huge help to consolidate on many reform fronts. And it may not be fair to assess performance based on outcomes in 2 years when most outcomes are yet to be evident from the transformation efforts of this government. Also, the peculiar politics, which requires astute navigation, makes transformation more complicated than it needs to be and may hold many things back that could have gone faster and better. EVI sincerely wishes the president the best. The best anecdotal advice I got from talking to people in the survey, someone said the president needs to listen to the people unfiltered. He may hear something different from what is being told by his normal circle of close advisors. Also, the president may have inherited a bungled electricity privatization and must make sorting out transmission a priority, as many watch the Siemens and other initiatives. If in the next 2 years electricity has still not significantly improved, the government will be seen to have failed, despite all the best intentions and efforts. Asia-Pacific markets were mixed after Wall Street notched gains on investor optimism on US-EU talks and as possibility of a deal gains traction. Well, that's it on this edition of Global Business Insights. Thanks for watching. This is Bola Ahmed Tinubu. Bye-bye.